Do you think that only business can make you wealthy? Or do you think that becoming a millionaire by living a 9 to 5 job is a dream? Well, yes, it is a dream which can come true. Some people have misconceptions that you can become a millionaire only if you have your own business. Yes, there are high chances due to scalability in the business. However, let me tell you that there are people who do not reach their financial goal even when they have their own business. Likewise, there are salaried people who have achieved the milestone of building wealth. Now, according to the author of Psychology of Money, doing well with money has little to do with how smart you are and a lot to do with how you behave. Hi, this is Jyoti Arora, tax expert from Clear. Welcome to our channel. In this video, we are going to break this stereotype mindset and show you how a salaried person can become a millionaire. Now, probably you are already on track of attaining your millionaire status. That is, you're investing consistently, you're keeping a watch on your spending, working excessively hard and saving. If yes, then great. What you can do is you can see these 4 strategies that we are going to discuss, which can make you a millionaire, and review that how far you are from this milestone. If you're not, and if you're not yet started, then you can definitely adopt them and start your journey. So the next question that might pop up in your mind is how much wealth one should have so that they can exactly be called as a millionaire. So here we don't want to quote any one figure, as everyone's income, saving, expenses are different, but by the word millionaire, we mean a healthy and comfortable financial life throughout, even that is after your retirement. Got it? So you can define your own version of millionaire. That is how much money you want, what kind of life you aspire to live, what kind of financial goals you want to achieve, etc. etc. Let us know in the comment section below what is your version of millionaire, that is, what is the meaning and what do you want to achieve. Type them down now. We might even help you if you have any queries. So we are going to discuss some methods and strategies that can help you reach there, or the signs that you're surely going to reach there. Let's start. So first things first, all of us wish to achieve financial freedom at some point in our life, and when it comes to doing that, we tend to believe that savings are enough to be financially stable. But after these uncertain COVID times, all of you would agree that savings alone are not enough. Ensuring your assets, your life, with having insurance policies is equally important. No one would ever want to be in a situation where they would have to wipe off all their savings just to pay for medical bills or a damaged car. Having insurance offers you financial security and also peace of mind. No amount of money can replace your peace of mind. The sum of all these reasons provides enough reason as to why insurance is necessary. So firstly, if you have not, then get yourself and your family a medical insurance of sufficient amount. If you're only the earning member in the family, then you may consider availing a term insurance. That is also a life insurance. Next comes vehicle insurance and property insurance, if these two can be accommodated from your income. Now, the convenient part of it is that you can purchase all these insurance nowadays online. So why wait? Go ahead and insure yourself and your family. Now, once you're done with covering your assets, health and life with insurance, you are done with the bare minimum. Give yourself a pat on the back and know that you can think further to walk towards your millionaire road. So first, define what is millionaire life for you. Decide on the amount you want to earn, the financial goals you want to achieve, like buying a house or investing for higher education, a particular amount of portfolio before you retire, that is retirement corpus. So are you thinking it's too much of an effort? Well, it's not. A small amount of effort and you will thank us later. So don't be lazy in this. Now, if you have 4-5 goals, you can invest for each goal. Goals should be always SMART. SMART. By SMART, we mean simple, measurable, achievable, relevant, and time bound. For instance, say you want to earn rupees 1 crore in 5 years. Now the goal is defined in a simple manner. It is measurable, that is 1 crore. It is achievable, that is, if your current salary is say rupees 10 lakh per annum, then aiming to earn 100 crores in 5 years would be unrealistic. But earning 1 crore is achievable task. This is also relevant, means it would be useful for your future financial health, and it is also time bound, that is, you want to achieve it in 5 years. So don't make random goals like I want to earn good money, or I want to earn 1 crore, you don't know when, and time bound, or I want to earn money in 5 years, you don't know how much. Be very well defined. Now this goal was earning specific goal. You can have goals for spending, that is when and how much and on what you want to spend. Suppose if you plan to buy a house in 5 years, you can have a goal to buy a house of rupees 1 crore after 5 years. This means you will have to invest for all these 5 years so that your investments would accumulate to an amount which will be equivalent to the down payment of your house. Also, you will have to increase your earnings to sustain the payment of home loan EMIs. Right? So just have a well-defined goal and use this SMART technique that we have just discussed. Quantify the amount and time and keep them realistic and achievable. Once your goals are defined, let's see what are the next steps you should be taking. Now you will have to follow these 3 basic mantras to achieve your financial goals. First is increase your income. Now, there could be many ways through which you can increase your income. Many of these ways you would have already tried or you would know. For example, the simplest way is to ask for a salary rise if you believe that you deserve it. Or you can consider going and taking up a course that you think would help you to upskill or give a better raise. Another way to increase salary income is to ask your employer to restructure your compensation to get reimbursements or allowances. For example, for commute, that is transport, for communication, food coupons, a course to upskill, etc. When the benefits are tax-free, you get extra cash in your wallet. Discuss with the senior team members or your HR to understand how your salary can be structured for what works best for you. Another option is to start freelancing jobs on weekends like content writing, digital marketing, trading of goods, or any professional services that you can offer. We know that it's not as simple as it sounds, but once you take the first step to make a client call, enroll for a course, or start writing the blog, it would not be very difficult, trust me. So start with any one thing that will improve your earning potential. Take just one step forward. Now the second principle or mantra is reduce unnecessary expenses. The first thing to do to reduce your expenses is start tracking your expenses. If you track your spending over 60 to 90 days, it will probably be an eye-opener for you. Who knew that how much money was going towards your not so necessary shopping or eating out frequently? You may be surprised at how much you have spent on certain items, but this gives you a good chance to see just where the adjustments are needed and to go towards it. Now, the old-fashioned way to track is to write down every expense. Fortunately, we live in the 21st century and technology can do our writing down for us. If you pay for anything with credit or debit card, then check your statements. Go through everything you've spent money on and determine what you really needed. One way to make things clear is to print out the statement and use different colored highlighters or pens and mark different types of spendings. Write them down if you want and categorize them under wants, needs, and goals. Some financial institutions even have a graph or a pie chart on the debit or credit card accounts, which will help you to analyze your spending in a better way. Now, once you've categorized the expenses, you have to watch these expenses critically and find out ways in which you can bring more efficiency to them. For example, if you eat out daily, you may consider hiring a cook, which will be anyways more economical. Likewise, keep thinking of smart ways in which your expenses can either be reduced or replaced altogether. For example, you can make a list before you go shopping so that you don't buy things which you may not need. Or if you are an overspender, then you may consider putting a limit on your credit card account. Now, third principle is investing. Last but the most important step is investing. Unless you do this, the first two steps would do very little for you in terms of meeting high financial goals. No matter how much you earn, saving or investing should be a part of your financial plan. One of the biggest reasons that the wealthy keeps getting wealthier is because they don't invest in traditional investments, like at least not fully. They invest in businesses because that is the fastest way to multiply wealth. To create a sustainable wealth, that is why we say that it is not necessary to start a new business. Anyone can just buy a small portion of the existing business. For example, you can invest in equity of a company, mutual funds, which is an indirect way to invest, or there are many other modes to invest. Let me give you an example of Reliance Industries. The share of Reliance Industries stood at rupees 46 in the year 2000, which is now rupees 2400. So someone who would have invested, say for example, rupees 1 lakh in 2000 would have a market value of their investment of rupees 52 lakh. That is more than 5000%. Now we understand that equity investments are risky, but we can at least invest in some less risky instruments which give around 8 to 10% return. Say for example, you can invest in mutual funds, index funds, debt funds, etc. What we are saying is start as early as possible, as the magic of compounding would do wonders to your money. A small amount invested systematically over a long period will give you handsome corpus at the end. A systematic investment plan or SIP in mutual fund is one of the best instruments to bring discipline and make you invest regularly. Now, SIP is usually a better investment option than a lump sum investment, as it utilizes market volatility to average out the cost of investment. What SIP does is that it helps to stagger your investment over intervals, which makes them safer than any one-shot or bullet investment. So what SIP does is that it enables the investor, for example you, to buy more units of the mutual fund when the stock market crashes or is at its low, and less units when the market rises. Now this helps to average out the cost of purchase over some time. This method has become widely popular as it uses rupee cost averaging to maximize the returns. You can start your SIP with a low amount of rupees 500 a month. Let's see an example to understand this better. Now we will use Clear's SIP calculator to understand this. You can find the calculator easily on Google by typing SIP calculator Clear tax and click on the first link. Now, say you are 25 years old and you start investing a small amount of just rupees 2000 a month for next 30 years. Expected return we are selecting is 10%. So you set this small amount automatically via your bank account till the 55 years of age, and at the end of the tenure you will have 45 lakhs as corpus with such small amount of investment. Now if you invest 5,000, the corpus will increase to 1.13 crore, and by investing 10,000 a month you will have a corpus of around 2.27 crores after 30 years. Isn't it great? So if one keeps increasing the SIP amount every year from their income, becoming a millionaire earlier is much more possible. So while you do the usual things in life, that is you go to job, you travel and do everything, don't forget to start something unusual like an SIP. Who knows that it might get you something cool someday, like a crore. The next step for investment is automate all your investments. If you haven't, then please make sure that as much as possible your investments are in the autopilot mode. right? What does that mean? Automating your finances means that you are giving a mandate to your bank account to directly deposit money to your investments accounts, SIPs, etc. This allows you to build financial wealth very effortlessly. According to the author David Batch from the book The Automatic Millionaire, what he says is that you'll never forget a payment again, and you will never be tempted to skimp on the savings, because you won't even see the money going directly from your salary account to your investments account. Now, the best way to maximize the returns from your investments is doing tax diversification. Now, what does it mean? It is the strategy to pay least taxes on your returns over your investments tenure. Usually when you retire or you stop working, and what all investments that you have made in your working life, you would want to redeem them, and then most of the income would go away in your taxes, right? And if you would have given a thought of it while you were making all these investments, and you would have tax diversified all your investments, then you would have to pay very less amount of taxes. Now, what you can do is you can choose the securities from different buckets, and you can minimize your tax outflow, right? So we have already made a detailed video on this, on how to carry out tax diversification. Also, we have given a detailed illustration, so go and check it out. The link is in the description box below. That's all for today's video. Hope you guys enjoyed watching it. Let us know which of these strategies you would like to pick, and type that in the comment section below. Also, it would be great if you already use some of these strategies or any different strategy and it is working for you, then please let us know in the comment section below. Also, do not forget to subscribe to our channel. This is me signing off. Take care. Bye bye. Happy investing.